The Nigerian economy is expected to see a further slowdown in the second half of this year as it grapples with a mounting number of headwinds threatening to worsen the country's poverty and unemployment levels. Now, going by the performance of major indicators in the first half of the year, which includes real GDP growth rate of 3.11% in the first quarter, inflation rate at over 18%, and fiscal deficit, Naira depreciation, rising insecurity, and also the electioneering activities going on. Well, it remains quite an interesting take ahead of the 2023 general elections. Now, however, this is not necessarily showing any respite as these fundamentals are biting much harder on citizens and also the overall business environment. But we'll be taking a look at all of these intricacies and how well this also allows the average Nigerian to participate in the financial market space. Joining me now to discuss this and more, I have Senior Associate Global Market Partners, Gafar Bashir. Thank you very much for joining us on the show today, Gafar.
Hi, thank you, David, for having me.
Okay, now let's start off the conversation really with the state of the Nigerian economy, the intense free fall we've seen of the Naira, the parallel market, and the gradual rebound we're trying to see here. We have to take a look at this wide and growing disparity between the parallel market and then the current I and E window rates, as well as whether or not the interventions of the CBN and a more hawkish stance of increased NPR can really tame this volatility in the market and how this transfers to markets like the fixed income market and the capital market. What's your take on the current realities we have here in the economy?
Okay, thank you for the question. First of all, I think it's important to point out that the recent depreciation that we've seen in the Naira in the last few weeks is largely driven by seasonal demand. What do I mean by that? Well, first of all, it's summer. So we usually have it that there's demand for efforts by Nigerians looking to go on vacations outside the country during summer. And there's also school fee funding generally during this period. It's also by Nigerians that have their kids in countries outside the country where they would require FX to fund payment of their fees during this period. So yes, well, that's not to say that speculative activities has not also been rife. We've also seen a lot of speculations the past couple of weeks, but fundamentally, those are the two major factors that has led the rally. Before we saw Nigerians in an attempt to hedge for currency devaluation risk, and then we saw a frenzy of demand, right? Now, that being said, whether the NPR hikes can tame this volatility, well, the MPR, the monetary policy rate is a short-term policy too, right? And to be fair, we need to see more significant hike than we currently have before we could hope that before we can incentivize fixed income, local fixed income investments, right? Than we currently have, especially for foreign investors, right? In an attempt to tame the depreciation in Naira, to convince foreign investors to invest, which are essentially portfolio investors, to invest in our local government, local fixed income securities, to bring in their dollars and then invest in naira denominated papers that we have in the country. We need to do more than we're currently doing as per the NPRX, right? Especially when you think about the fact that the dollar denominated papers, which are the Eurobond papers, are yielding slightly higher on most maturities than local papers. So, what really is the incentive for a foreign investor to bring in their dollars and invest in naira? So, yes, so that means we need a whole lot more significant hike in the NPR than we currently have before we can begin to see, before that can help us. But we need to understand that a hike in NPR also means increased borrowing costs for the government, and this is a government that is already in a dire situation. I mean, the January to April budget performance that was published revealed that they recorded just 1.6 trillion in revenue and 1.9 in debt servicing. So we can't even make enough money to service our debt. So increased NPR means increased borrowing costs for the government. So I guess the government would have to prioritize what is more important to them in the short term: currency stability versus their fiscal position. And perhaps an IMF intervention might just be the way to go, because I mean, an IMF intervention would mean guaranteed FX inflow, right? At the same time, you also have funding to support whatever borrowing costs that you would need to incur in order to prop up the economy, in the long term. But that even that aside, when you also consider the bottlenecks that investors face when they enter our markets, whenever they seek to exit, is another incentive that would not exactly encourage investors to bring in their dollars, or that would make an NPR hike do much for them, basically.
And then
And to yeah, go
if
on,
I'm
go on.
important here, Gafar, now let's just look at how attractive now the fixed income market is, really positioning itself for much more investment volume for local investors, especially at a point in time like this where we are dealing with economic fragility and everyone is scampering for some safe haven.
Okay. We've seen some sell-off, for example, or essentially a correction in the equity market, right, the past week. But and you would expect that this funds will flow in the fixed income market, especially with yields, the rise in yields that we've seen the past 1 month or two, right? But that's not exactly the case yet, because for investors looking to invest in the fixed income market, or investors in the local fixed income market, investors still see higher room for yields to go higher. Really, excuse me. Yeah, so investors still see more room for yields to go higher, right? So, I mean, like I mentioned earlier, it's clear that this government needs to borrow a whole lot of money. Year to date, they've achieved about 65% of their local borrowing plans, right? And we understand that given the high yields in the Eurobond market, it's not exactly an option for them right now. So they still need to tap into the local fixed income market, which means there's room for yields to still go up. And until investors feel comfortable that yields are at the levels where they think it can get to, we might not see, we might not consider the current yields in the fixed income market attractive enough for participation.
And then I was asking my previous guest about some intricacies and plot twists that we should expect for the second half of the year. Successfully, we've seen that we've recorded over subscription for the treasury bills that we've seen auction. Now, let's take a look at this market as well and what's also fueling this oversubscription, which we've recorded so far.
Well, I'm not sure the subscription that we've seen in the NCB auctions is as great as, for example, the NCB auction is as great as you think. I mean, the last auction, we saw subscription of, say, 1.2 times what was offered. And when you look at the last two auctions together, we've seen less than 1.2 times. However, our previous auction before then saw way higher than that. That's the auction that happened in June, 29th of June. We saw about 1.9 times. Before that, we saw 5.1 times the offer amount. Before then, so we've seen like more impressive subscription at the auctions before now, and which is me saying basically that the subscription that we've seen in last auctions are not exactly impressive, and that is quite understandable given the level of liquidity that we've seen in the market. The market has been grappling with really low level of liquidity the past couple of weeks, right? So that which is one of the factors that is leading to high yields in the market. So yeah, I'm not very sure that I would agree that the subscription levels we're seeing at the auction is significant.
So you
And also,
think?
if you think about the fact that yeah,
Please
go on,
continue with your line of thoughts.
Yeah, I was going to say that if you think about the fact that the auction that happened in July, 13th of July, where the auction result published reveals that the CBN might have actually been supporting the DMO to meet its borrowing targets, right? You would agree with me that real subscription levels at the auctions, not very great in recent times, which is reflective of market liquidity, essentially.
And you don't expect any turnaround?
Well, for the rest of the month, so we have about over maturity of, say, 150 billion this month, right? And coupon of just about 68 billion. This is hardly significant to make a dent. There was also fact payments that we received that was expected or anticipated to that would think would drive demand, but that has not happened yet, especially when investors expect yields to go up. So even if there is some little idle cash that anybody has, the fact that they expect yields to go up would mean that they wouldn't participate as much in the market when they comfortable to at least where they sense to be the peak. You understand? So yeah, that's why I see the interim.
Thank you so much for your time on the show today, Gafar Bashir. It's been a pleasure speaking with you. We were losing some connection there, but thank you for your contribution on the show today.